You are a wonderful God. Oh, my creator. Only you are.
What's good, YouTube man? It's your boy Doyle back with another video. In today's video, I'm gonna be breaking down the signs of trending markets. As beginners, I know we rely on indicators, but the main indicator is price, reading price, seeing what the banks are doing to push price. I'm gonna be breaking down 4 things that I look for when I'm trying to spot a trend, the strength of a trend. So let's just get to it. So the 4 things that I mainly look for is the distance between swings, momentum candles, no retest after the breakout, and no wicks when it breaks out. Okay. So if we're looking at this scenario right here, what time is this? This is 9:30. So it's a New York Stock Exchange open, and we have a momentum candle right here. We have a momentum candle right here. Okay. That's the momentum candle. As it broke out, it did do a small retest. But look at the candle. The candle didn't have any wicks on the top or the bottom, okay? If I'm looking at this, I'm not going to instantly say, oh, it's an uptrend, okay? But once I see that this swing high is above this, okay, first of all, once I see that it breaks structure, I know that it's starting a trend. Okay, that's number one. Just because it breaks out don't mean it's going to continue. We need some type of pullback or some type of new swing high being created for it to be a trend. Okay, so as it pulls back and break up again, breaking this little swing high right here, now I know that I'm in an uptrend. Now, in this situation, it did have a retest, but since this momentum candle didn't have no wicks, I would be confident that this is going to continue up. Now, if we're just strictly looking at price and we have no indicators, the next swing high is right here. If I see this distance gap from this swing high to this swing high, I know that this is a strong trend. Okay, this is a strong trend, so we should continue to look for buys. Okay, now we do have momentum. We have another momentum candle right here. We can see that the pullbacks are very small, but the bullish candles are very big. So we know that the banks are pushing the market up. Okay. Now as it continues to go up, this is the next swing high. Now look at this distance from this swing high to these 2 swing highs. It's slowing down now we know that the momentum of the market is slowing down. So I'm not saying that the trend is over, but the trend is getting weaker. Okay, so we have to be very careful in this situation. Now we have another swing high. Now you see how it's getting weaker. Now this can be a range. At this point, it can be a range. So that's a way to just strictly look at price and see when the momentum is slowing down. Let's go to the next setup because it's gonna be different ones. Okay. All right. So that kind of look identical to the next setup. So we have, where's the mark? So we have a swing high right here, and it breaks out. This one little candle is a little pullback. Okay, this one little candle is a little pullback, but you see how small the pullback is before it shot up, and then we have another momentum candle. Then we have a small pullback, and then another momentum candle, and this is the next swing high. You see that distance. Once I see that distance, I know that the market is really pushing up. The banks really want to push it up, and we should be looking for buys. Now, most traders are going to be like, okay, that's overextended. I should be looking for a reversal. But if the structure is not being broken to the downside, if this not being broken to go down, I don't care about what's going on. You know what I'm saying? I don't care about taking those sales, because if no swing lows is being broken, I'm going to continue for the buy. Okay, so we have another swing high right here. Now look at that distance. That literally looked like the similar one I just shown. Look at this distance, and then look at that distance swing high. So now we know that we're slowing down. Now, just because it's slowing down don't mean it's going to be a complete reversal. We need structure to be broken. Structure is right here. Structure is right here and right here. If it have a major break, then I know that we should be looking for sales. Do we get that? No. And we do another breakout and look at that breakout. It's momentum, so we're still looking for buys. Okay, so let me look at no wicks. Do we have no wicks? We have no wick right here. Look at this candle, no wick. Momentum. There is no, the market don't want to push down, it wants to continue up. Okay, so you can get a lot of information from just strictly looking at the wicks. I know people be looking at moving averages and MACDs and all of that and Bollinger Bands. None of that matters. Okay, it really don't matter. If you're trading price action, all we need is the candlesticks. Okay, so the distance between swings is really key because you can know it's literally a indicator that the market is slowing down or it's speeding up. Like that's just I think that's one of the best things to do when you're trying to gauge the strength of the trend is to see the swing highs and the swing lows distance. Even for sales, to see like the swing lows, like how far are they? You know what I'm saying? So let's go to the next setup. Let's take this stuff off. Okay. Okay, I think. Okay. Oh no. I thought I had one marked up, but we are going to just draw one right now. Okay, so what do we have here? We have consolidation, right? We have consolidation. It pushes up. Do it continue up? No, it do not. It pushes back into the consolidation, then breaks below. Now, this could be a spike up to go the other way. This is retail getting stopped out to go the other way. But let's look at, let's take the 4 signs and let's clone it so we can see the four things that we're looking for to decipher a strong trend. Okay, so let's go back into this. Okay, so we have a strong push up and then in reverse. That's a fake out. Okay, that's retail being stopped out over here to go the other way. Now we have a major market structure break like that. That's breaking with momentum. So since this area right here got broke to the downside, now we should be looking for sales. Now look at the swing highs. This is a swing high. This is a swing high. Swing high. Now we're getting bigger. You see how? Let's take this off. You see how it went from these 2 swing highs being close to each other to now this swing high making distance. Then we get another swing high. We're getting a bigger distance. That's how we know the strength of the trend. And let's see if we have any no retest after breakout. So here go our breakout right here. These wicks. It broke out. Did it ever come back to that area? No, it didn't until later. So that's another strength that not another strength. Another indicator that it will have some momentum pushing down. Okay. This candle right here, you see this candle right here? It didn't have any wicks. Okay, it didn't have any wicks. You can count this little baby wick, but that's not really a major wick. Okay, so this is a momentum candle pushing the market down. So that's another indicator. Now once it comes down, it starts throwing wicks. Okay, so you see how we have major rejections. So this can be a potential reversal, but the market is giving you a chance to spot these things. We don't just automatically just, oh, it's starting to break up, buy. No, we need multiple rejections for us to even consider a reversal. And once we see that it comes back to it and still don't want to close past and it start pushing it up, we can try to catch the reversal for it. But the strength of a trend, it all depends on structure being broken, the distance between swings, momentum candles, and if you see a no retest after breakout, we know that this is about to be a strong breakout. Like the market is really wanting to push in that direction. Okay. And another thing that you can really spot is look at the pullbacks. Look at is the pullback strong or they're weak? Because let's take this off. Look at this pullback versus this pullback. You get what I'm saying? The pullbacks are getting more weaker. They're getting more weaker. So you should expect since it's now this is a downtrend, that once it comes down, it's gonna be more stronger candles. So look at these candles. You see how those are pushing with momentum, but the pullbacks are very weak. It's like dojis, not really strong candles. So that's really an identifier that this is a downtrend. And then once it starts reversing, we will see more momentum green candles, more momentum bullish candles. Now we have this, we have that one. You know what I'm saying? Like it's starting to print more green candles. You're starting to see less momentum red candles. So you can really look at price and see what the market wants to do. Okay. I hope this video helped anybody that having a hard time reading price action. All we're really looking for is structure being broken. Is it a retest after the breakout to see how strong the trend is? What is the difference between swings? Is there candles with no wicks? Because once we see that there's no candles with no wicks, we know that the banks are pushing the market really fast, and they have made their mind as to what direction they want to go in. So I hope this video helped you for beginners. Price action is everything. We did not need indicators. I mean, you can throw some moving averages on, but they lag. You know what I'm saying? Indicators lag, and indicators are based off of price action. So if you can be able to read price, you can be ahead of all the other traders. So that's all I got. Peace and love. I'm out.
Got me a